and welcome to Finextra TV. I'm Angelica Malin, coming to you from Sibos 2023 in Toronto. Today we're talking about the perfect payment storm. I'm joined by Dalbir Sahota and Ed Metzger from LexisNexis Risk Solutions. Thank you both so much for joining me. So starting with some takeaways from Sibos so far, can you tell me a little bit about some of the key points around the payments landscape that you've been hearing about?
So I think one of the key topics has been around the rise of instant payments. So there's been lots of talk about the recent launch of FedNow in the US, joining lots of other payment schemes that have been launched around the world with real traction. And so what we're hearing from a lot of our customers and partners is how do we control the risk of that instant payments landscape while delivering excellent customer experience.
Fantastic. And what are some of the top priorities that you think the industry needs to tackle?
So I think what our customers, and I think what their customers in turn are saying is you've got to do things right once. You have to fix problems at the front end, so in other words that the customer can help themselves to solve problems, and then you have to focus on straight-through processing. Straight-through processing drives lower costs, which can then be passed on to the end consumer, be it a person or a company. So with those key elements, I think you can really create a really powerful and compelling payment proposition. And what you also have to do around all of that is make sure that you're fully compliant. And so you're managing the risk of sanctions, of fraud, because those are, again, real customer experience killers.
Thank you. Dal, talking about sanctions, something we've heard about as a boom in sanctions, could you share some insights on how we manage kind of during geopolitical uncertainty, how banks and financial institutions can manage that within their networks?
Absolutely, and I think it's one of the main competing forces driven by regulators across the globe. I think the essence of false positive reduction still is steeped out in the industry. It's a key challenge for many financial institutions across the globe. However, I think in that perfect storm, there's two sides of that equation. I think on one side, just a continuation of reducing false positives, but to Ed's point, thinking about how that customer experience can be really smoothed at the front end, at the point of when a payment is actually born. So think about sanctions at the point of a payment initiation is essentially a way to solve for that problem. Not the only way, but it takes many levers to solve for such a macro challenging problem in the market. And having sanctions checks done at the point of payment initiation essentially means that there's less risk being taken on when the transaction gets to transactional screening. So really solving for that problem. But it's one of many levers to address the set problem.
And there's been some discussion around opportunities to perform early on sanctions. What are some of the advantages of that as you see it?
It really sits with false positive reduction and also thinking about overall risk reduction as well. So the risk profile of preventing a payment from being born, which has sanctions associated to it, financial institutions are not taking on that risk. However, historically, with checks not being done at the front end, that risk plays through into the value chain and overall into that ecosystem.
Fantastic. Thank you, Dal. Thank you so much for your time today and for talking with me.
Great to talk to you. Thanks.
Thank you.